This is the Green Factor C Sustainability Weekly Roundup for 13 to 17 July 2026. This week, the practical signals came from solar plus storage, waste regulation, climate finance, industrial parks, clean power markets, and project execution across Southeast Asia. The main thesis is simple: bankability is becoming the test. Sustainability ambition is no longer enough. The real question is whether projects can secure permits, capital, grid access, feedstock, data, and credible operators. Malaysia gave the strongest clean power signal. Petra launched LSS-6 with 2.65 gigawatts of solar capacity and 1.25 gigawatts of battery storage across 3 tender packages. Storage is moving into mainstream solar procurement, not sitting outside the system as a pilot. Malaysia also showed how commercial and municipal infrastructure is becoming part of the energy transition. Gentari brought rooftop solar into KLIA2 operations, while Selangor-linked plans around waste-to-energy and renewables point to practical decarbonization inside high-demand operating assets. The capital signal in Malaysia is also important. AIGCC found that major institutional investors managing about 2.5 trillion ringgit are increasing commitments to climate solutions or transition finance. For companies, that means credible project pipelines and emissions data will matter more. Indonesia's week was about waste systems. The government is targeting waste management reform in 40 major cities, moving on extended producer responsibility for plastic packaging, and simplifying waste-to-energy approvals. The direction is clear: waste is becoming an infrastructure and compliance market. Indonesia also connected water infrastructure to clean power. 5 new dams were framed not only as irrigation and flood control assets, but also as platforms for hydroelectric generation and floating solar. Resilience infrastructure is starting to carry an energy transition role. Vietnam's signal was finance for industrial decarbonization. CA Bank secured climate finance support for SMEs. Officials flagged financing as the barrier to greener industrial parks. Verdant Vietnam raised bond capital for rooftop solar. The opportunity is practical, distributed, and industrial. Singapore continued to sharpen its role as a regional finance and carbon market hub. Temasek grew its sustainability-linked portfolio, while Singapore's Sustainability Roundup pointed to carbon project grants, Article 6 implementation, and green infrastructure finance for Asia. Thailand showed why policy design matters. Clean energy market measures are moving, while storage developers still need tariff reform, market access, and revenue stacking rules. Batteries may be technically ready, but bankability depends on the market structure around them. The Philippines added 2 signals: a restarted waste-to-energy auction with a larger 400-megawatt target, and a Green Climate Fund grant for resilience project preparation. The common thread is pipeline building, not only announcements. The operator view for the week is this: build the system behind the claim. The region does not only need more sustainability messaging, it needs bankable clean power, credible waste systems, transition finance, reliable data, practical procurement, and disciplined execution. Subscribe to the Green Factor for the weekly signals that matter across Southeast Asia.